do follow you on Twitter, and I've seen some posts on, Charlie Munger's lessons and his early days and everything in his on his recent demise. So, are there any learnings that you've picked up from his life or his investing journey that you've translated into your own workings?
So, I mean, these are, revered names in the market, whether it is Warren Buffett, whether it is Charlie Munger, so many other, market greats are there. In India also, uh, I think most of them do give this entire thesis of that you need to have a long-term view. Now, that long-term view does not mean that you have to, just sleep on stocks for long term. It just means that in the long term you need to have a strategy that you will continue to follow dispassionately. That strategy may be that you need to churn your stocks every year. That may be a strategy. The strategy may be that I don't want to go deep into when markets are falling, I don't want my portfolio to go too deep in the red.
Hmm.
So this is, I mean, if I were to take their thesis, obviously I am not in that camp of value investing or fundamental investing, but I definitely feel that having a long-term view on whatever strategy you are using is something that they propagated very well. Being patient with whatever you're doing is another thing. Having the right behavior towards the market. The markets is essentially I usually call it's a regret machine.
Hmm.
So, there are four things that you can do in the markets. If you buy some stocks and the stock goes up immediately, you will regret why didn't you buy more.
Right.
If you sell the stock and the price goes up, you'll regret, why did I sell? The price is up now.
Hmm.
If you bought the stock and the price fell down, then you will regret, why did I buy at that price?
Yeah.
And if you sell the stock and price goes down, then you may regret, why didn't I sell all of my stock at that price? So
Hmm.
it's a regret generation machine. Whatever you do in the market, it will make you regret about your decision because nobody can catch the tops and nobody can catch the bottoms.
Right.
So you have to make the best possible outcome from the market without having a sort of a pressure on yourself that you did not take the right decisions.
Hmm. Hmm.
So hence this entire thesis of a non-discretionary way of investing. Non-discretionary means, for your viewers, that you are bound by rules
Okay.
and you are playing a game systematically and you are not having any discretion in those rules. If I say, let's say there is a rule that I will not buy any stocks which are below, let's say, 200-day moving average, for instance.
Hmm.
If this is a rule in your system, then you are not having the discretion. You are saying that, if something is below this moving average, I will not buy it.
Right.
I will only buy it at when these two, three conditions are met. I
Hmm.
will only sell it when these two, three conditions are met. Because what happens is you buy a stock and let's say the stock has done well. Just assume the stock has done well. You bought the stock at 100, it went to 200 rupees. Now, what is your decision at 150? What is your decision at 200? If the stock is, let's say, going to 500, how will you justify it to yourself till when you will hold? And let's say from 500 it starts to drop towards 200, when it will be that point where you will say, I will take a call and exit? How do you make those decisions? Because there are 10,000 variables. I
Yeah.
mean, there are variables around the macros, how the interest rate and inflation is changing around the world. There is macro events happening in the government, how the government may be, doing taxation or benefits to a particular sector.
Hmm.
Within the sector, a stock company may be having variation in terms of market share, or they're doing something right or doing something wrong. There may be management changes. There may be some market forces which are trying to, take the stock up or down. There are so many gamut of variables always in the market. And how can you, expect any person to have a handle on all these variables and come to a very precise decision
Right.
in terms of buying and selling? It is virtually impossible.
Makes.
And there is so many people around you who will either confirm your biases, that what you're doing is right, or they will, try to tell you the opposite, and you may lose the confidence in your own original thought.
इंडिया में बहुत सारे लोगों को इन्वेस्ट और ट्रेड करके पैसा तो बनाना है, बट अ लॉट ऑफ देम डोंट नो द राइट वे। इसी वजह से दे रिलाई ऑन टिप्स एंड एडवाइसेस फ्रॉम द रॉन्ग पीपल। और इसी सिचुएशन को इम्प्रूव करने के लिए हमने अपसर्च.club एज अ प्लेटफॉर्म बनाया है, जहाँ पे हमारे पास 50 से भी ज़्यादा कोर्सेज है फ्रॉम इंडस्ट्री एक्सपर्ट्स जिनके पास सालों का एक्सपीरियंस है। एज यू कैन सी, हमारे सारे कोर्सेज काफ़ी अफोर्डेबल रेंजेस में हैं। फॉर एग्जाम्पल, ज्योति बुद्धिया का ऑप्शन ट्रेडिंग कोर्स हमारे पास सिर्फ ₹399 में अवेलेबल है। इसमें हमारे पास 6 घंटे का कंटेंट है और मैम ने वो सारी चीजें कवर की है विच आर नेसेसरी फॉर यू टू बिकम एन ऑप्शन ट्रेडर। अगर आप देखोगे तो फ्रॉम अ बिगनर लेवल टू एन एडवांस लेवल, ट्रेडिंग और इन्वेस्टिंग के रिलेटेड हमारे पास बहुत सारे कोर्सेज अवेलेबल हैं। इसी को और अफोर्डेबल बनाने के लिए हमने इन सभी कोर्सेज को हमारे सब्सक्रिप्शन मॉडल में भी इंक्लूड किया है। आप ये सभी कोर्सेज को सिर्फ 2,999 रुपीज में एक्सेस कर सकते हो। तो आज ही आप हमारी वेबसाइट चेकआउट कीजिए और अपनी ट्रेडिंग और इन्वेस्टिंग जर्नी को सही तरीके से शुरू कीजिए।
So, for me at least, I mean, I can't say for others, but for me, all this was impossible to do. I said, by stroke of luck, if somebody gets some good stocks and sit on them, maybe they can make some money. But otherwise, it's a very randomized game. And to make a, winning out of a randomized game, you need to have a proper strategy. Just like when you go to a casino, and let's say you're playing the slot machine, you'll need to have a strategy. Okay, I'm bringing this much money, I'm betting this much money on this. If this happens, I will do this. If that happens, I will do that. So it's like a, algorithm, a sort of a flow chart. So that's what ultimately we, at Weekend Investing, we crystallized our thoughts into these kind of frameworks, what to buy, when to buy, how much to buy, when to sell. These are the 4 sort of cardinal principles that we follow. And at any point of time, all these 4 questions should be clearly and precisely answered. There is no ambiguity.
Right.
So this is how you can create frameworks where there is clarity of what you're doing, because it's a business, right? I mean, you have to treat your stock investing, trading like a business. And you have to scale that business. Gradually, you need to become financially independent. You have to, make sure that it makes enough money so that you can let go of your other profession or business, whatever you were doing. And it is very much possible to do so. The only hindrance we have usually is our own self, because one is we don't believe in, what we are doing is right all the time. So we have a question mark on our own thinking. Am I doing right? Did I buy right? Did I sell right? So if that question mark is there, then every time you will fear, whether if I'm going to buy now, should I buy? Maybe it is not the right time. When you are doing non-discretionary system-based, sort of a quant approach to the market, then you are totally away from all this. You are saying my rules say buy at this point these stocks, so I'm buying. I'm not putting my mind to it. So you are essentially taking your mind out of the game. Your mind is your biggest, enemy actually. So you take yourself out of it. You are seeing it from a distance, what is happening, and you allow the system to go forth. Very, very simple, techniques people use, and they do well in the market because they don't get emotionally involved or attached to a stock. It's like, you don't want to marry a stock.
Yeah.
Because when you buy conventionally, when you buy a stock, you read up so much about it, you will do research about it, you will buy the products of that company, people will reinforce your decisions.
You get attached to that company, and then you take decisions as per that.
And when you hear so much about it and you've had it and it's given you some gain also, you tend to feel that this is the best thing and I should stick with it, whatever may happen. Even if it drops to 80%, it's okay, it will come back.
Yeah.
But that may happen or that may not happen, because we are living in a world where disruption is the sort of central force. So, whether it is technology based disruption, whether it is, some geopolitics is changing, how import and export is happening in your country, or how, subsidies are being given to certain sectors. So everything is changing very dynamic now, and very rapidly. So, the new generation that is coming, things are changing very, very frequently. There was some study, I think by Morgan Stanley, that 20, 30, 40 years back, the average age of an American company in S&P 500 used to be like 27, 30 years.
Okay.
The average longevity of a company. Now that is dropping to like 10 or 12 years.
Oh,
So if you think that, you can just buy and sleep for the next 20 years and magic will happen, it may not happen. That entire technology may change. Your company may go bust.
yeah.
So you need to have an active, view of the portfolio, or you give your money to a manager, to a mutual fund, to a PMS or whatever, and let them take care of the money, sort
Right.
of. So these are some of the thoughts around this. Yeah.